Canadian retail sales rose 0.8% to almost $70 billion in March, helped by an increase in new car sales. Let's go to Jimmy Jean. He's chief economist and strategist at Desjardins. He joins us now to talk a bit about this. Thanks for your time today.
Good afternoon.
Is this still front-loading, you think, ahead of tariffs, and where would we be without that?
Yeah, I think so. You're seeing, a big surge in auto sales, 4.8% surge in auto sales, and we have reports on the ground of consumers trying to front run the tariffs. So yeah, that created that momentum there. So when you exclude that, you have nominal sales actually down 0.7% for the month. There was also some gyrations with the gasoline prices. Gasoline prices actually fell, but when you remove those two very choppy effects, you have something that looks close to 0.2% nominal. That means pretty much flat in real terms. So I wouldn't say it was that strong of a report. We did have a positive flash, 0.5% for the month of April, but its name is a flash, so it can still be revised. And the point about that is that you have tariff effects that are hitting. We're already seeing that in the April CPI reports, and so that number might be flattered by price effects.
Okay, so looking back to March for a moment, just outside of vehicles, were Canadians buying anything else?
You have people have been focusing on really staples there. The vehicles was the biggest factor by far. But what you're really seeing is that the people were focusing on staples and really a defensive type of spending pattern, and less on the sort of more discretionary items that people tend to spend on when confidence is high, when the job market is thriving, which there's none of that right now. So even in the composition, you do get the sense that Canadians are being very cautious right now. It's something that's expected to continue, of course, in the next few months of data, given the headwinds that are facing the Canadian economy, not so much that much in terms of the direct effect of tariffs, but just the general state of uncertainty about the job market, uncertainty about the investment landscape. And, we think that combined with the weakness we are seeing, underlying weakness we're seeing in the job market, that will lead to overall a muted profile for consumer spending going forward.
Okay, I'll get into that in a moment. I just wondered whether personally you're seeing any change in sentiment since the tariffs were sort of dialed up and then dialed down. Are you talking to people? Are they feeling a little bit better than they did even a month ago?
I would say at the margin. I think there's a lot of wariness in the fact that the everything that's been coming out of the Oval Office, and that was in full display, of course, today, is highly unpredictable. So it doesn't mean that even though there was maybe a little bit of relief that Trump wouldn't be able to come back with some of those threats as he's been making. What we've really been seeing since the beginning of the year has been that on again, off again situation. So even though there was that that detente with China, and now we're seeing things ratcheting up with Europe. So it's kind of that tariffs on again situation now. So I think it's getting more and more in people's psyche. And even if we're saying right now that Canada is not that directly affected by tariffs, outside of some very key strategic sectors, of course, but in general we have a better deal than most other countries. You're not hearing people saying, I'm going to return to the U.S. or, I'm interested in investing in the U.S. People are still on the fence right now.
Let's talk about the bigger picture then, with the March numbers and with what you mentioned was sort of the flash look at April. I'm wondering where you see growth. We're hearing a lot about revised growth, but not necessarily a recession. Where are you landing on this?
We have upgraded our outlook, given taking into consideration the more precise information we've had on Canadian tariffs, what we're expecting as well in terms of the level of compliance on CUSMA and the pace that this will take. And also we've adjusted our forecast for the U.S. In the wake of the detente with China. But things are, I think the big message here is that even though we're no longer calling a recession in the U.S., we're calling 2 quarters of contraction in Canada, very mild. I think the big picture is that this is still highly, highly uncertain. Things have not played out. We're seeing renewed tensions in the bond market that could in turn affect the economy. We're seeing a squeeze in financial conditions. So all those things have yet to play out. We're making a lot of assumptions. That's the important part as well, is that we're assuming that we've seen the peak in trade tensions, which might not be the case. You're seeing what's happening in Europe, and could have happened. Those tariffs have been put on pause as reciprocal tariffs until July 3rd. So you could still have another leg up in renewed tensions. So I think the whole uncertainty, the whole a reduction in business investment, hiring on pause, those are likely to remain in place in Canada. And that's why we have a contraction. If you add also the demographic slowdown and also the fact that you have 2 out of 3, the 3 largest Canadian metropolitan areas that have their housing markets that are in a state of decline, we think there's still enough in Canada to think that those next 4 to 6 months will be quite difficult.
How hard is it to go forward with the guessing? Because you mentioned, for example, in July, that 90-day period of pause on tariffs will expire, but no one's really sure what that means. People are, again, just extrapolating it at what it could mean. How hard is it to plan ahead or to forward look with the amount of guessing you have to do?
Well, that's what this approach to policymaking does. It removes the ability to plan. Now, yes, it's frustrating for somebody like me as an economist because the chances that you get forecasts wrong is just higher. But I'm just putting my place in the shoes of a corporation that needs to plan to make major investments, several billions of dollars that hinge on whether Trump will change his mind. So that must be extremely challenging and extremely difficult to navigate. But either for economists or for CFOs or anybody who's in a position that needs to plan ahead, it's close to impossible right now, unfortunately.
Got it. Jimmy Jean, good to have you, sir. Thanks for joining us on The Close today.
Pleasure. Thank you.